Well, hello everyone. K Kim here from the Traders Club, and thank you again for tuning in to the midweek update video. Um, Again, my name is K Kim, and well, today I want to start with the semiconductor on the market analysis for this week. And currently, you're looking at semiconductor ETF. SMH here with monthly chart. I want to start with this because I think semiconductor might give us some answer to where the market is potentially going. And I'm not saying that again, this is absolute. What I'm saying is yes, we do have dire situation, dire chart patterns and price action on the Dow Jones and the S&P 500. I'm not discounting the fact of that. However, when we look at NASDAQ, when we look at Russell, when we look at semiconductor, we have kind of opposing view of S&P 500 and the Dow Jones. So I wanted to look at market vector sector here, semiconductor ETF, semiconductor SMH, and looking at monthly chart here. Obviously, you can see that we have been in this kind of a what I like to call like a bottoming process or accumulation phase for about 14 years. And that's a really, really long time. What I mean by that is that we really were not in a downtrend for 14 years. We really were not in an uptrend for 14 years. What we were actually essentially moving sideways on semiconductor. This is one of the things is that, just because you hold things for 10, 15 years, you're always going to make money. I mean, if you went long here back in 2001, you're pretty much breaking even today after 14 years. You held it for 14 years, you're breaking even. Obviously, there are other charts that you hold for 14 years that you did very, very well. But this is just one of the examples. What I'm saying is it's not always that if you hold for 10 years or 20 years, you're always gonna make money. That is a false statement. There's nothing. You don't ever use term like always or never or for sure, 100% or guaranteed. Nothing like that in the market. So nothing is absolute. Nothing is guaranteed, and we know that. But anyway, going back to this monthly chart, what we are seeing is this is what I call accumulation phase, or channeling action, or bottoming out, whatever you want to call it. Is obviously this is where just for 14 years we just really been hanging around this vicinity. You can call it a massive double bottom, or you can call it some awkward looking inverted head and shoulder, confirming right at that level of resistance right about here, and we had a pretty good move to the upside. Whatever you want to call it, this is an important level at $43 on semiconductor ETF here, and we came precisely to that level last week when the market had that abrupt sell-off right on that weekly and monthly 50 MA there. So this is important level. This is an overhead supply which that we just blew right through it, and now that old resistance is becoming a new support possibly. And if we can able to gap back up from this level, I think the trend will continue. Obviously, looking at this right here on the semiconductor, are we in a primary term uptrend? Yes, that's something that I'm always talking about. We must respect primary term uptrend. Why? Because we will have pullbacks, we will have declines, we will have sell-offs. That is a nature of this market. That's a given. That's a normal thing. Don't freak out on it. But without major term topping pattern, which we don't have on the semiconductor, we can continue to be in an uptrend. You can see that we went up, we pull back, we went up, we pull back, we went up. You could say this is a little pullback there, and then we had a huge move, and then we're pulling back there. I bet that's about 50% of this move. If I just throw a Fibonacci there, perfectly 50%. You can see that just right on that 50%. If I just measure this move, many times a 50% move, that's what I call a magic number. It's not always the case, but that's a lot of times 50% Fibonacci seems to work well if you're dealing with the primary term uptrend, right? If you go back to Apple when it crashed 2012, you just put your Fibonacci from all the way from the top, from all the way to the bottom. It's the 50%. That's where it bounced. Same with the recent decline. We bounced right on that 50%. Semiconductor, currently you're looking at right on that 50%, very, very precisely, right on that 50 EMA on the monthly chart. We bounced, and then we're just hanging around here. So again, that is a level that is coinciding with that pivot level, right? There are a lot of sellers up here. Potentially they are turning into buyers in this vicinity, or people who bought it down here, you know, they're rebuying at this level, or people who bought it down here, they thought this is a good level to rebuy in. Whatever the case might be, this is an important pivotal level that we're dealing with. And let me tell you this, we have an initial confirmation of a breakout after this accumulation phase. And then a lot of times, again, market doesn't go straight up. We know this, and we pull back. And pullback is a good thing because then it establishes an uptrend. Uptrend is higher lows, higher highs. It doesn't mean higher highs, higher highs, higher highs, higher highs. It's higher highs and higher lows. Higher lows can only be established and cultivated when the market pulls back, right? So we pull back to 50%, which is a good size of a correctional move there, or a good decline for it to continue to be in a primary term uptrend, to establish primary term uptrend. You can see, you can even draw that uptrend line there, which is coinciding with the horizontal resistance or pivot, and then rising uptrend support level, also coinciding with the 50% retracement. This is a very, very important level. This is what I'm proposing to you. If we hold this level, $45.79, $44 price action, and if we can able to reclaim that 10 EMA on the monthly chart, which is about $53, I do believe in a long run, maybe next 1 or 2 years, we can even get into $70 and $80 on semiconductor. And if that happens, I do believe that semiconductor can possibly lead the market as well. So I think semiconductor might be a key index towards the end of the year. I know the late last year, I wrote an article called the S&P 5 or the Russell 2000 is going to be a key index, and then until recently that it was the Russell 2000. I still think the Russell 2000 is going to be a key index next year, but I think along with now Russell 2000 might have a team. Russell 2000 might have a friend who's going to support his cause. It's a semiconductor. I think the semiconductor, if you see semiconductor going to the upside, that could possibly be repairment or reproduction process. Reproduction. I'm trying to think of the word that I can articulate what I'm thinking in my head. But to reestablish this decline, this damage that we've seen in the market. You know what I'm saying? If the semiconductor get back up, I think that could be a key index. Semiconductor can be a key index to the way of repairing this market since with the decline that we've seen last week. So looking at the weekly chart also, it looks good in my opinion, because weekly chart, let me just throw let's look at stochastic on the semiconductor on the weekly chart, right? Stochastic tends to work well in a trend, and also in a channel, also when you're looking at a primary term, right? If you're studying primary term, stochastic can be a good help. So what happens is, after these kind of significant pullbacks, what does that do? You know what I mean? That's what you want to see, is that you can see that we saw a pullback. Guess where okay, so I'm gonna draw a line right here. Okay, so we saw that pullback. That's where where the stochastic came down to. We saw that pullback where the semiconductor. So I'm talking about pretty sizable pullback. So when you're studying sizable pullbacks and looking at weeklies like a primary term, stochastic is a good tool to look and see what happens. Obviously the sentiment is going to be different, so what you have to understand is you can't just make this an absolute, just when we get to oversold, overbought status, it's absolutely buy. I mean, it's not always the case, but it works in a trend, or if it's trending, or if it's channeling. Okay, if it's channeling, you can see that if we bought it right here, you were able to get that up to this resistance level. Same thing here in an uptrend. You can see we're in an uptrend. We're getting into an uptrend, right? And you see where we came down to. where it came down to, we're back at that level. And we can see we had a pretty sizable crash here back in 2008. We came down to that oversold status before it bounced. You can see some of these levels here. We're back at that level. But different scenarios. This was a downtrend right here. This is a downtrend. So the sentiment is much different because this is an uptrend. Okay? This is up. This is down, right? So you have to understand the sentiment first before looking at these oscillators to give you certain direction or certain forecast, right? So looking at this uptrend here, we get up, we come down, we pull back, we get to that oversold status, and it gap back up. We get another oversold status, we get another oversold status, and we haven't been here for a while. And we haven't been here over for a while. Same thing like we haven't been here over for a while, and then finally got back down to that level, and we had a pretty good bounce at that level. But again, we're in a different sentiment. We're in a primary to uptrend versus this was on a downtrend or channeling action right here. So which means it is more potent today in this vicinity. Again, this is absolute that this must bounce here. No, absolutely not. What he's saying is if it's going to bounce, this is a good level that it is going to do it. So I think, you know, keep an eye on semiconductor could be helpful to you. I mean, looking at a daily chart though, as far as a primary term trend reversal, we really want to see this thing getting above 54, 55. This is a level where bears should be very, very fearful of this is where you're gonna see a lot of buyers showing up in this vicinity. Keep in mind we're working with a gap here. Every time you work with a gap, there will be a lot of hostility from the bears and a lot of shenanigan, and things can get hectic, right? So don't think that if you get above 54 everything's gonna be great and it's gonna go to the moon. No, things are going to get hectic. But if you look at things more of a primary term, you'll see that after many months that we're gonna start to really find some buyers, and then possibly market vectors, semiconductor can possibly get back into its primary term uptrend, which then we could have a huge move. Because we had this kind of move, we could have another move to the upside there. So that's something to keep an eye on. Let me look at NASDAQ real quick. I'm not going to go too deep into it. NASDAQ, obviously, we're still holding up here. This was a strong, important level we talked about last week's midweek update. This is a level we need to get above. Buyers went for it, but again, every time we're dealing with the gap, this is a gap right here, and we're dealing with the resistance level, right? This is a resistance, prior support, new resistance. When we're dealing with this kind of overhead supply, they're bound to see some sellers there. So looking at this here, we're a little bit of bear engulfing pattern, but nothing to freak out over. We're dealing with a lot of volatility in markets. So it's really 50-50 what's going to happen tomorrow, to be honest with you, right? Because this was a bull flag here on this day, and we had a huge gap down. Right. This was again back in late August that we had a bull flag. We gapped on anyway. Just because we have a bear flag, it's going to continue lower. I mean, it could, but what I'm saying is we're dealing with such a volatile market that anything can go as far as looking at a minor term. So I wouldn't put too much focus on the minor term, where I would rather try to put your focus on the more of a weekly term, more of a big picture. Because in the minor term, people just gonna go crazy and they're gonna do what they're gonna do. And so as far as the weekly term is concerned, we know that market is still in a primary, especially on the NASDAQ. We're still in a primary term uptrend here. Actually, it looks better if we just go out like this, like that, and we're still in a primary term uptrend. Actually, the price action is up here, so we already recovered 60% of its decline in just a week or two. So we're still in a primary term uptrend without proper topping pattern on the NASDAQ. So I can't say, again, this is what I've been preaching, I can't say at this point that this market is going to go to nothing, but I still want to see this thing getting back up. I think that this abrupt sell-off that it happened in just 3 days, I think that's, in my opinion, I'm just still in a camp that might have been it. That was a correction, and then the market might want to bounce back up here. But we still need to see price action confirming that, because there's a lot of opinions and there's a lot of thoughts and feelings, just like I just told you, right? Everybody will give their feelings and opinions. Price action will not lie. So price action getting above 108 or so, 107 will give a lot of confidence to the buyers. So let's see if we can continue that. Let me actually just skip down to Spider and we'll end the index analysis here. So I know we did a lot of let me get rid of that. Actually, let me get rid of everything here. Okay, so same thing happening on a Spider. You can see that this is the level that we found a lot of buyers before, and so you know this is a level that it says important pivot, and the old support is becoming a new resistance here. So the question right now is, what is going on? Are we looking at some kind of a bull pennant, or is it a lower high? And nobody knows the answer to that question at this point. So what we want to see is if we can stay above 200, and the next level resistance will be 204 after that. And this is a level where you're probably going to see a lot of buyers. Probably going to see buyers starting to see a lot of confidence. This is a level where there's going to be a lot of confusion. This is a level where you're going to see a lot of fear. Okay, below 200, fear. Below 204, confusion on the S&P 500. A lot of confusion. Above 207 and 208, confidence, right? Confidence above, let's say 207-ish or so, 206, 209 is confidence, and below 204, confusion, and then we're in the phase of fear, right? And then anything below, you know, any of these levels will be a panic. Will be a panic here. So we're still right on that level of fear, on this resistance level. That's what we saw today, because we actually gapped up in the morning, and what was that? A fear. Because as soon as it gapped up, everyone's happy. Yes, it's gonna go. And then and then somebody starts selling, and then it's like a domino effect. Everybody's so fearful. Oh my God, it's not gonna go. And then you get a sell off here. But a lot of times what could happen is we're dealing with such a volatile market. A lot of times when you're dealing with this kind of fear market, it could just get back up and just you know, it just gaps up and act like nothing happened. Remember, we saw that happening here. Like, and you can see that long bearish candle. Which day was that? Right here. So August 25th, right? With a huge gap up. And then came all the way down, and then we get a gap up, and then it sold up, and then got back up, and then we get a gap up, and then we saw the follow through, and then we threw a bull flag, and which looked like it could possibly continue higher, but then we gapped down, and then it looked like it was gonna go lower, but then it continued higher, and then we threw a little shooting star, and then it gapped down. We threw a little bit of doji, and then gap up, and then follow through. We gap up again, and then a fear, and then we get a bear engulfing pattern. Right? It's interesting, you know, stories there, but it's just human beings acting with all anxiety. That's it. Just fear and greed working there. So what the bear is going to say, this is a bear engulfing pattern, thus it's going to go lower. That is true that it is bear engulfing. Well, this was a bull flag. This was a textbook bull flag. Did it continue higher? No, it did not. We actually gapped down. So this is a bear engulfing. I cannot say that it's going to continue lower, because again, below this 200, we're dealing with a fearful market. So everything's out the window. It's just a shenanigan. It's just people, whatever people feel like at that day, that's what it's gonna be. This is a reason why I do not recommend anybody to put too much, you know, put too much attention on a daily fluctuations. It's gonna do what it's gonna do. Look at a big picture, and you have a better forecast, and you will understand the market better that way. So again, let's see what happens. If you can get back above 200, that will be good for the buyers. And then after that, again, fear here, confusion here, and then confidence here, and a panic below 188 or 185-ish level there. So let's watch that and see what happens. We'll go from there. Like quickly, let's look at Apple here. Apple, you know, look at the fear and all that stuff again. You know, above about 122, confidence here. Confusion will be somewhere around 117 or so. 117. This will be a confusion. We're still in the area of a fear. Okay. you know, and then anywhere below this level will be a panic here. But I have a hard time thinking that it's gonna go that low unless the market starts really go. I'm still in the camp that you know, Apple will have a good bounce here. This is a weekly chart. What I like about this weekly chart is this weekly candle there. So weekly candle, you can see that weekly candle, we're still in an uptrend. This is how you know that if that, you know, people sometimes ask me, how do you know that, you know, how much can it give up before it loses its potency, it loses control? Well, what it is that you see that long bullish candle. That's what we call bullish piercing candle, right? Bullish piercing, right? It gapped down and then it pierced the previous week's candle more than 50%. So this is a bullish piercing reversal candle. Obviously it needs a follow through for it to confirm, but the question is, how much can it give up before it loses control? It's kind of like this: if you own your company, all you need is you gotta own at least 50%, 51% of your company for you to have a full control, right? If you give that up, if somebody owns more than you, let's say, you know, like 60%, that person can have that control because there's more than that. It was kind of similar in the candlestick. What it needs at least 50%. It needs to hold at least 50% of its candle. It needs to stay above 50% of its candle for it to continue to be the reversal candle. And then it could come down, and then if it gets back up, this guy still in control as a reversal pattern. So obviously we're nowhere near 50%. 50% would be about 105 or so. So we're throwing a little bit of, could be a potentially bull flag. I'm not sure at this point. We need a confirmation to see that. So that's how, you know, if you want to see more about, you know, longer term sentiment on that candle sentiment there on the weekly chart, that's how you see it. Daily chart, obviously we are still in a downtrend. You can see the lower highs and lower lows. So what we want to, first things first, if we can really get above 117 here, ultimately about 200 though, we're really seeing some resistance on this gap area. That's what we're seeing. All resistance and all support, new resistance, actually about 113 level here. That's what we're seeing here. But it looks a lot like, to me, is a bull flag, right? Or bull pennant before going higher. I wonder if we saw any similar signals of that. And so this will be a good exercise here for you guys. What day is this? Actually, never mind. 2014 April. No, that's not. Never mind that. Never mind that. Anyway, so I'm trying to find if there's any example that I can find for you guys, as because we haven't, you know, this is, I mean, this looked like a bull pennant, but you really wouldn't know until we see some kind of a substantiation from the price section there. But, you know, we are, you know, respectively, we are in downtrend as far as the, you know, minor and intermediate term is concerned. So definitely that's something to keep an eye on. But primary term concern, we're in an uptrend, right? The same thing happened back here. This was a downtrend for sure right here. You can use this example. You know, you could say, hey, this is a downtrend right here. We even gotten below this, you know, made a lower low, lower highs. This is a downtrend. That is correct in a downtrend. And you could also argue with me, hey, we gotten below this long-term uptrend support and becoming resistance. This thing is going to go to 60. The reason I say this is I heard that somebody saying, people always say stuff like that all the time. And then what happened? What do I have to say? Well, we're still in a primary term uptrend, are we not? Right? We're still cultivating primary term higher lows, higher highs, and then this thing continued higher. And again, just because of that, I'm not saying that that's exactly what's going to happen. What I'm saying is because we're still in a primary term uptrend, I want to give benefit of doubt to the buyers in the primary term. You know, again, very important level. It needs to get above 200. This is a level where you're going to see a lot of confidence in the buyers. So we still got ways to go. Next level resistance about 115. And the next level of support is about 108. So if we can hold 108 or so, possibly regaining control, or we can even have another gap up tomorrow and then go higher on Friday. That could possibly be the scenario there. So let's see what happens there. We'll look at that, and I'll end the video with the Tesla. Tesla is just I still not in Tesla. I really don't want to right now it's starting to look very, very hectic here. I really don't want to be part of Tesla until at least it kind of fills this gap here. I think it could start to get hectic bit here in this is kind of a confusion level. I think above about 266 you're gonna probably find a lot of confidence there, but we also have gap area at 275. So is things gonna get hectic? I don't think we're gonna see a smooth move. If it does continue higher, I think Tesla could continue higher if it does, but I don't think it's going to be smooth. I think there's going to be a lot of volatility there, and it just really, I'm really not. It just this move, you could also be in a channel here for some time as well. So I'm kind of reluctant to go long on Tesla anytime soon, and at least I won't be hasty on it. But we're in a minor term, micro term bullish there. We're trying to get at this resistance, but I think anywhere below 268, I'll call it a confusion level, right? 268.43. That's the level that you're gonna see kind of a confusion, a little bit of fear there, I think. And with even when we get up here, there's a little bit of gap, I think, and so that could kind of act as something like that. I think what could look good is if we get up here and come back down and then get up, and that would potentially give a lot of confidence for the buyers in this vicinity here. But again, I wouldn't be hasty on it. If you're not in Tesla, I wouldn't be hasty on it at all at this point. But good news is this is considered as high or low. That low is actually higher than this low. So good news is we're on an uptrend. At least we're cultivating higher lows. So in the long term, it actually does look good. Only problem is we haven't cultivated a higher high yet. So if we finally break out, that could be a higher high there. But again, when we're dealing with this pricing, that even when you break out, I don't know if it's gonna go straight. I think it could come back down again. We might be dealing with some kind of a channeling type of deal action where it does something like this, where it goes up, and then induce stuff like this. And so yeah, it just it's more of a quick trade, more of a swing trade type of deal, I think, on Tesla. I don't know if you're gonna hold anything any longer than unless you want to go really long, like you're holding a hold for like 10 years, then maybe Tesla might be way to go. But it's more of a swing trading vehicle on Tesla, I think. So that's everything. I hope you guys find the analysis today helpful to you in your trading. I always wish you the best luck in your trading, in your journey to understand the market. Just keep in mind that this market, as a technical analyst, that our job is to find order in this chaotic environment. This is chaos. I mean, you look at this market, is a freaking chaos. You look at on a daily basis. I mean, these things just don't make sense. It's just craziness. And our job is to find order and sense. And they're in that process. There's a beauty in that. So take pride in what you do. This is probably most difficult vocation anybody can do, but there's a huge reward in it. If you can able to understand market, if you can have to find peace and comfort and patience and know when to be aggressive when you need to be aggressive, and discipline. If you can find these things, you can trade the market with ease and peace and without getting to you, because this market knows how to get to you. This market knows how to start you up. This market knows how to ruin your weekend, right? How many people? I mean, over there. How many? Can you guess how many people in the market were just pissed off on Labor Day weekend just because the market wasn't doing so well, right? And it's still. It's more than charts. It's more than fundamental analysis. It's more than technical analysis. It's more than all of that. You must know how to trade this market without emotion. But we are emotional beings, so how do we do that, right? That's what they call functional psychopathy, right? You must learn how to turn it on and off the switch and able to look at this, because with emotion you will not look at this market logically. You look at this market with emotion, fear, and greed, and based on that fear and greed, you will make decisions based on that fear and greed. And because of that, this market will rob you and slaughter you. And so, and I always try to be real with people that you know what, if this market is ruining your life, it's not worth it. Get out. It's not for you. This isn't for you. So I was trying to be real with my analysis. I'm real with what this job entails, and be real with the psychological aspect of this trading life, and hopefully I can help somebody out there. So again, if you have any questions or comments or anything, please use my blog to ask any comments. I don't check my Twitter or stock twist that much, to be honest with you. So please keep in touch with me. You can email me as well if you don't want your comments to be public. So either way, have a great night, and we'll talk again next week. I'll try to do a live event next Wednesday, but I can't promise, but I'll do my best, and we'll talk next week then. Have a great night, guys, and we'll talk soon.